All right, I'm gonna give everybody a moment to tune in to this live broadcast. We want to talk about mortgages, finance, and everything here today. Got my buddy Derek Bissen, that's actually been in the business for a while. So, again, I'm just gonna give everybody a few moments to log on and catch on to this live broadcast. And I also want to share it to a couple of places as well so that everyone can benefit from what we are talking about today. Because this is great information. You know, everybody's distracted by the news of the elections and everything, but we have to continue to move on to talk about finances and what's going to happen in the future because there's still people buying houses and mortgages. You're pretty busy, right?
Yeah, just a little bit.
It's a little overwhelmed.
Yeah, just slightly. Yeah,
I mean, but it is very important that we do, talk about these things and that we do encourage people to think about their finances, think about the future, not get distracted in what's going on, right now. So let's get started. I'm also, if you have any questions or anything like that, send them in. If we don't get to them on the broadcast, we'll get to them. We'll answer them sooner or later. But again, my name is Christian Frazier. I've actually been in the real estate business for about 20 years. When I was in the Orlando area, I was the number 4 realtor in the entire state of Florida. Sold $68 million one year. And I knew you back then when I was killing it.
yeah.
And I was considered to be the master networker. I was the guy who hung out with the mayor and everybody at the club. I actually
Was?
Oh no, so yeah, I know was. So I actually, funny thing is that when I was networking in Orlando, I ran into Nancy Pelosi at the club in Orlando. Like there's this place called Club Court. People, business people used to rent it out and everything. So it was fun. And she was there for lunch one day, and everybody like Nancy Pelosi, and I'm like, whoa. This is way back when. So it was an exciting place, an exciting time. I'm still networking, and we're still connected all these years. And to me, I feel like that's very important when you meet people. There's a lot of people, a lot of you that have been connected with me way back in the days of MySpace. Like some of y'all I met on MySpace. So when you stay connected to people for so long, I really value and those types of relationships. Yeah, but today, we're talking about mortgage. This is one of my good friends, good guy, Derek Bissen. He works for Fidelity.
Fidelity Funding Mortgage Corp. We're out of Maitland, but we're all over the state of Florida.
All over the state of Florida, and he's the guy that down through the years, if I have questions about mortgages, we go back and forth. Like this is what's happening. Like if I have a question about timelines, FHA, he can get that information to me. And normally when I call you, he already knows that I need it like instantly. So he'll stop and give me the information. So we've always talked about mortgages down through the years, and not a lot of your real estate agents really understand mortgages. Is that correct?
Or they misunderstand them.
Or they misunderstand mortgages. And Derek has a video on his website. Go to his website, unconventionallending.com. He talks about staying in your lane. Because a lot of real estate agents don't know how to stay in their lane. They want to try to control the mortgage part of the business, and they don't actually know it, which is crazy.
Well, the thing is they try to do too much, right? And when I say stay in your lane, it's not me trying to be rude or anything like that. It's actually just trying to help them manage the process better.
Mm-hmm.
Like when you're selling real estate, as Christian will say all day long, there's only so much information you could know. When you're a real estate agent, you're trying to be a facilitator in the transaction. You're not trying to do everything. You're not trying to be a plumber. You're not trying to be a roofer. You're showing the house. You're helping them find that right, perfect house, and you can give them some rough guidance in a bunch of different ways. But a good real estate agent, like Christian will tell you, it has assembled a team professionals that they work with.
Oh yeah.
And that's essential to the success of a real estate agent.
Oh,
And one of
definitely.
them is a financier. So,
You got to have different types of financiers or different types of mortgage people that you work with. I think that a real estate agent doesn't have to understand everything about mortgages, but I feel like you should have enough knowledge about certain subjects so that you can steer your clients or help them make a well-informed, because they can't steer their clients. They have to help them make a well-informed decision about, where they should go. Give an example, like Derek specializes in working with the self-employed and business owners. So it actually requires a special skill set, and not just every mortgage person knows how to do it. So you don't want to work with somebody that's try to get caught up on self-employed and business owners, because it's just too much. So you want somebody who does it on a consistent basis. So I would send them to you, but I wouldn't send you a first-time home buyer, because that's not, your area of expertise. That's not something that you do every day. So you would not really give the client the best service because you're not knowledgeable in that area.
Yeah, when it comes to down payment assistance, those are not my bag, as they say. That's definitely not something that I focus on. So what you're trying to say, Christian, is that this is why a good real estate agent keeps somebody in their house of lenders that does specialize in, say, first-time home buyer down payment assistance programs. Not everybody qualifies for them. That's a very special type of process. But we specialize, like I specialize in working with self-employed buyers, people who are working with builders.
Oh yeah, you get all the builder business.
Yeah, I work with 5 national builders to get their toughest loan scenarios for the closing game.
Yeah, so it's important that the agent that you're working with is selecting the right type of mortgage professionals for you to talk to, because you don't want to be talking to someone that really doesn't fit your needs. So I feel like that's very important. If you even get an eerie feeling that your agent doesn't know what they're doing, it's probably true, and that's just the beginning. That's just the tip of the iceberg. So, and again, when I started out, I didn't know everything there was to know about real estate. Still don't, but I'm not going to give you any fluff. And that's what good agents do. Like, I don't know, but I'll find out. But when you feel like an agent's giving you fluff or something like that, and then it's just not a really good kind of relationship that you want to be involved in. So it's really important that you pay close attention, to how your agents act and react, because, even, having been in the industry, I can say a lot more about the industry because I'm not licensed right now. And I found out that I can actually make more money actually without a license than with a license. So I can say that sometimes real estate agents are put along the same I guess up against car salesmen and compared to car salesmen, and like people who are just out for a quick buck. I feel like the reason why I was able to be successful in real estate because I cared about helping people. And if you care about people more than making the money, then it shows, and it's always a good deal.
Yeah. When your heart's in it, people know.
You can't just be doing it for the money, because it's just not going to be a successful thing.
I think one of the things that if you're working with a real estate agent that is so like if you get a real estate agent that says, I don't know, but I'm going to get back to you, or you work with a mortgage lender that says, I'm not really sure about that, but I want to make sure you get a good answer. I'll get right back, research that, and get right back at you. That is such a powerful statement. And it tells you that the professional you're working with is a pro, a real pro.
Oh yeah.
Because I can tell you, it's
even if you did know,
it's tempting to want to run, especially
for everything.
Yeah. And when your heart is into helping people, you can't make the mistake of just trying to just give somebody, let's face it, a BS answer. It's going to come back to haunt them and you, of course. So
Yeah, exactly. And for me, like you may have known the answer, but if you've been in the business like you have for 20, 25 years, you might have forgotten it. So
yeah,
it's best. And then also our industry is constantly evolving and changing. So you have to go and find out if your answer is still relevant.
I can tell you the one thing that is constant about our industry is change. I usually tell people when I have my first consultation with them is like, listen, every day I walk into work, I've got one foot on a banana peel and the other one on a roller skate. The guidelines are changing constantly. If I stopped working for 2 months, I feel like I wouldn't even know my own industry. There's so much stuff that's coming, especially coming down the pike this year. And I'll tell you, if you're self-employed, there's a lot of stuff that's going to be changing. I think when
What's that for the good or for the worse?
well, if you're self-employed, it ain't going to get any easier. So if you've ever had a hard time buying or refinancing a house and you're a business owner, things aren't going to get easier for you. So what's happened? Let me kind of break that down.
Sure, yeah, exactly.
So if you're self-employed, unfortunately, what's happened here in the last couple of months and going, as we continue into 2021, is that COVID or the coronavirus epidemic has had a interesting effect on mortgage lending. Now, if you're paying attention to this, you've probably seen the news reports of like super low interest rates, right?
Mm-hmm.
That's one positive effect that it's had for the consumer.
Oh yeah. What are like rates currently now? Like,
okay, so
pretty decent credit.
So like if you are getting say an FHA 30-year fixed, right now at the time we were doing this broadcast, the typical rates for us is right around 2.25.
Mm-hmm.
That's a
Wow.
ridiculous low rate.
That is. I mean, if at these rates, you really should consider doing 15-year mortgages at some
You can. I mean, it depends upon the 15-year fixed. Like the 30-year fixed conventional right now is somewhere in like around 2.75 right
Mm-hmm.
now, with no points. There's APR and everything, but that's the typical average interest rate depending upon your credit score, your
Mm-hmm.
down payment, that sort of thing. The typical FHA, again, is around 2.25. A conventional 15, for instance, might be like around 2.375 or 2.5,
Wow.
which is still ridiculously low. But getting back to self-employed, right? If you own a business, now for those of you who don't own a business, I'm about to share with you a little interesting information. But if you do own a business, you're going to recognize this real quick. So when you own a business in America, you have a tax code that is sort of stacked for you, meaning that you don't have to pay taxes except your payroll taxes, but your business doesn't really pay taxes until the following year. So the business makes its money and then gets its financial facts together and gives it to usually a financial like a tax advisor,
Mm-hmm.
who is going to take the U.S. tax code and is going to maximize it, because that maximum it's done to reduce the business owner's taxable income. That works like amazingly for the business owner. They
Mm-hmm.
pay a lot less than the typical wage earner does as a percentage of the income. However, when you go to purchase a home, the tables kind of get turned, right? So the business owner who's never bought a house before, they may be in business for like 2 or 3 years, and they go to apply for a loan, and boom, 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 all of a sudden they don't qualify, and they're just shocked because
I'm making so much money.
they know how much money they're making, but on their tax returns, they've either expensed away the income or they haven't even reported it to begin with. So this has actually been exacerbated through COVID. So this is one of the side effects of COVID, is that so many businesses and small businesses have really felt the sting, and a lot of them are going out of business. It's increased the level of default on home loans that have been for self-employed individuals.
Mm-hmm.
So what do lenders do? The only thing lenders are capable of doing is to shore the risk up and charge a little bit more. So this year, they're going to do something, this is unconventional loans for Fannie Mae and Freddie Mac. So any type of conventional loan program, they're going to change a lot of things. So like if you're self-employed, you're not going to get the same interest rate that you would if you are an employee of a company. In
Of
fact,
course, but a lot of people see that. They see the interest rates broadcast over the internet. They see it on the news. They see it in the papers, all the financial reports, and they think, "Oh, that's what today's interest rates are. That's what I should be able to get." But then, the higher the risk,
right.
it's going to be the interest rate is going to be, it's going to cost them a little bit
Yeah,
more.
but this is the first time they've ever actually been punitive against a business owner. So a business owner may say, "Hey, look, I'm going to see you see these shocking interest rates like 2.75, and then they go to apply, and it might be as much as a half a point higher, and it's only because they're self-employed."
Yeah.
So that's a big kind of a shell shock that a lot of business owners are going to have this year, and it's not going to be welcome news. The other
Is that the same for a 1099 employee as well?
Yes, in terms of qualifying for a mortgage, you basically have to be, if you're 1099 a wage earner, like many realtors, for instance, are a wage earner. I mean, 1099, like contractor income.
Yes.
And you go
Independent
to
contractor.
exactly. So you go to file your tax returns, and you're under the same rules as a person that owns a restaurant or any other small business.
Because you can file for expenses to
Correct.
reduce
And
your
wipe
income.
away. So here's the general rule of thumb: if you tell Uncle Sam that you're broke, we think you're broke because we're looking at your tax returns. So if your business brought in, say, $250,000, but you had 150, in expenses, well, you didn't make as much as you thought you did in the eyes of the lender, because we have to look at your tax returns.
There was something that came up a couple of months ago, and it's not just your credit scores. You also have to look at your debt ratios. But there could be something that comes up on another report that a lot of people don't know about.
Yes.
Talk about that a little bit.
This actually happened to me, so I'm glad you brought this up. So lenders do more than look at your credit report. All right, so just that's a fact of life, whether you really want to admit it or not. This is what it is. So when you apply for a mortgage, the mortgage company is going to take the application. They're going to run the credit. They are going to run what's called a tri-merge credit report. So they're going to go out to the 3 national repositories, which are Equifax, TransUnion, and Experian. They're going to get the 3 different scores because they're all most likely to be different. They're going to look at that. They're going to look at your credit history, your payment history, how you've been managing your revolving trade lines, meaning your credit cards, whether you're maxed out on them or carry virtually no balance on them. And they look at all these, and each one of them crunches that down to a 3-digit number, somewhere between like 450 and 850. So they're going to give you a credit score, right? And then the lender is going to use the one that is numerically in the middle. So that's just one report. Now, when the loan goes into processing, before it goes to the underwriter, the lender runs a second report. Some companies use a company called Fraud Guard, for instance. It's basically a background check. They're looking to see if you have any police, activity, if you have any warrants against you, if you have any judgments against you, if you've ever defaulted on a loan.
But this does not in no means stop you in any way from getting a loan. It depends on the severity of the act. Am I correct?
Correct.
And they got to be real severe.
Yes. So one of the things is when you get a mortgage, your mortgage is registered with something called MERS, or Mortgage Electronic Registration System. Right. So it's a national repository. It's given a unique identifier. Now, they're going to take that, and that's going to show up on your background report too. So what happened to me is a long time ago, is during the mortgage meltdown, I had a financial problem, and I had a bank stall my foreclosure for close to 7 years, I think it was. And eventually there was a class action suit against this lender, and basically the charges as they were dropped. Basically they were they in a class action suit, they were forced to remove the negative activity and the foreclosure from my my credit report. However, when I went to go refinance, they pulled this second, and it came up and it says, "Oh, well, there you are at blah 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 blah, Any Street USA. Was that you?" And I'm like, "Yeah, I didn't think you could find that, But yes, we do find things. It's our job to find things.
So I just don't want to discourage anybody
Yeah.
That have had a foreclosure before, because there's a lot of people now who are now eligible who had a foreclosure, like say 10 years ago during the economic meltdown, then 10 to 12 years ago. Now they're all buying, they're eligible to buy houses. And a lot of people think that because they had a foreclosure before, they can't do it. I actually sold some houses, over a little over a year ago, people who had issues in the past and they were able to overcome them. So don't think that everything that happened in your past is going to be able to stop you from buying a house now.
That's correct. Actually, if you've ever had, we call these major credit events or derogatory credit events, it doesn't stop you forever. In the lending industry, we let you kind of back in the door and we will lend to you again. There are certain waiting periods depending upon if it was a foreclosure versus a bankruptcy or a deed in lieu of foreclosure or a short sale.
But so now you have that list and the timelines on your website.
Yep, took the words right out of my mouth. I actually keep a chart on my site, which is unconventionallending.com. You want to put the link in there? We'll put the link in the description.
I already did, and you can look it up. It's unconventionallending.com. It's not too hard to, and you can also look it up on YouTube as well. But as a matter of fact, we've been talking about that. I want to skip just a little bit away from mortgages because we also do a little marketing together. So
yes,
like first of all, the unconventionallending.com website is a pretty awesome website, and I've been working with Derek for years on, just kind of like slowly making some changes. And if it was up to me, a lot of stuff would have been done already. But he also is a very busy person, and instead of outsourcing it to other people, we tend to build our own websites. I was actually in Florida Realtor magazine because I built 4 of my websites that were on the first and second page of Google if you looked up Orlando real estate. So I've been in SEO and all of this kind of stuff and marketing for a long time. I'm a geek and he's a geek as well. So, we've been working on marketing, but recently we've been working on some marketing to try to drive his business up. Now, your lead sources have been going like crazy, like
listen to this guy, seriously. Yeah, so because it's important to know that like for instance, I tend, like he said, to take on a lot of it myself. By trade, I'm also a graphic designer. I'm a videographer. I'm a drone pilot. I'm a saxophone player. I play in an R&B band. There's a lot of different interests that keep my brain going in 1,000 different directions. Besides mortgages, but seriously, everything that you've told me to implement is always important.
Yeah. So like if some of you are in the industry out there and you want to like really expand your market, I've been telling people this. Like I actually have a course certified for CE credits in the state of Georgia to teach other realtors how to use the internet to increase their business and do better business. So, I decided I was just going to do it, as a consulting thing for mortgage companies or other real estate companies, and really just, take one company per market. I can't tell everybody all my secrets in the same market.
Yeah.
We be competing against each other, but if I can help one realtor or one brokerage firm in each market or one mortgage person in each market, that's what I'm going to do. And the plans work. I got the certified documented evidence. I mean, when I sold $68 million in 1 year, and most brokerage firms don't sell that with like 30, 40 people together. Most of those leads came from the internet. And I was still giving out 10 to 20 leads to real estate agents a day. Some of those guys that were with me at Century 21, they're still following me right now, like Pedro. We're friends here on Facebook, and we've been connected up. I was handing out leads left and right. Hey, and then if you guys can't get referrals and mortgages, but in real estate we can. So I still collect checks, from people who work I didn't have to do. Right. So if you want to like build up your business, and really for me, it doesn't matter what business you're in. Marketing is marketing, branding is branding, experiences are experiences, and they really they go across many different industries. It just is what it is. Yeah, so look, I thank you guys for listening in. We just wanted to give you some quick overviews of some mortgage information. Make sure you follow Derek. Make sure you go to his webpage. There's a lot of like information up there about, just do the research, before you engage a mortgage professional. That way you're well informed and you can ask some questions, that are important. You don't waste your time, you don't waste their time, and you can really prepare yourself to
Yeah,
get a
I
home,
mean,
to get a home.
deliberately designed that so that you could do your research. I don't think you're going to find a more objective source, really. If you want to know what a conventional loan was, I've got a video on every single product page. So if you just go to the page, your homepage, you go to programs and pick a program, you're going to find a lot of information. Especially if you scroll down, there's calculators, there's guidelines. I publish a lot of stuff that gets that I think makes it different than other places, but.
And some of those videos we film right here. I'm the director. I do, yeah, Now I can't take the credit for the editing most of the time. That's the super editor. That's not my thing. I stay in my lane when it comes to that. I can do some simple stuff, but when you want it to be real fancy, it's gonna take me 5 days to do what he can do in an hour. So I'm just gonna, turn it over to the professionals. Again, thank you for listening. I hope something was said that will keep you well informed, about home. There's lots of information on your page. There's lots of information on my page, my social media, on my Instagram about real estate. I'm on Instagram TV, and there's a whole real estate series up there. So make sure you follow me there and YouTube. And again, thank you very much.
Thanks
Talk
a
to you
lot.
soon.
Thanks for having me.